best time to invest in property might actually be when the market is falling. However, not with every property. Let me explain. So, let's say right now you're lucky. You've got some money to invest. You know you want to invest in property, but you're worried about buying something today and it being worth less tomorrow. You've got two options. You can wait till prices start to rise, and then as they start to rise and the market is more positive, start looking to buy, or just start buying now. Waiting sounds like a really solid plan, except for one thing. That is what most other people are going to do, and also those day-to-day buys looking to move home, not just investors. So what ends up happening is you start looking to buy at the exact same time as everyone else. That hots up the competition and it gets harder and harder to find good investments. Let me prove this to you. In my last video, I talked about if now is the right time to invest or not. I shared this graph that shows how prices have increased and decreased in price as a percentage over the last 30 years. What I want you to look at is the period we had our last major global recession in 2007. Look between January 2007 to January 2010. Look how house prices dropped and dropped, but then look how the moment they went up, they continue riding up and up to the point where house prices are growing 10%, as high a percentage increase as before the crash in prices. And then watch how prices then crash again and then stay in this slump from 2010 to 2013. That whole period was essentially another boom and bust period. Prices increasing dramatically, then dropping again. If you could go back in time and invest, when would you invest? You would probably want to invest at those points where prices are dropping, not at the periods where prices are growing and growing. But looking back, that isn't what most buyers did. This demonstrates my point. As prices were dropping, investors like you and me were sat on our hands, talking like we are now, about if now is the right time to buy, and then doing nothing. What this does is it creates pent-up demand of lots of buyers and investors just waiting, unsure about what to do. This then fuels this aggressive bounce back we saw in prices. As when prices begin to rise again, everyone starts feeling a bit more confident and starts trying to buy at, in reality, the worst time. This actually makes it really hard to find good opportunities. It is actually way easier to look for properties while prices are dropping rather than increasing. But why? Well, my friends, because there is less competition and more opportunities. When everyone is concerned about prices continuing to drop and therefore deciding not to buy, this leaves a disbalance of more sellers wanting to sell and being unable to, which leads to a portion willing to consider taking lower offers on their properties. So not only are you able to buy houses for less than they were previously because prices have dropped, but it is also then easier to negotiate further discounts as you have less competition. This is important because this offers you the ultimate tool to buying safe in a falling market. And that tool, my friends, is to buy below market value. So what do I mean by below market value? Well, let's say there is a property that last year was worth £100,000, but because the market has fallen, it is now on the market for £95,000. And you're then able to negotiate a purchase price of £85,000. You've essentially bought the property for about 10% below today's market value, but better, about 15% below the historic maximum value. The likelihood of prices dropping as much as 15% from their highs is pretty slim, which is what makes a purchase like this a really smart one. But in reality, not every property will be on the market at the right price and also have the benefit of a discount on top. You need to filter the market for the right opportunities. To find out how, check out my next video on how to find below market value properties.